Hey traders, happy Saturday. Welcome back to another video. Today I wanted to take a few minutes to talk a little bit about the latest Commitment of Traders report. Now I look at this myself every week, but some weeks are certainly more interesting than others. And this one is definitely one of those weeks. So what I've done here, I've just pulled up the Edge Finder's Commitment of Traders data. And what we're going to do is go through a little bit of this today to just discuss some of the interesting things that I found. Now, first of all, for the new people who are kind of newer to the Commitment of Traders report, what is it? Well, it's a weekly filed report where we can see what institutional money is buying and selling at its core. That's the simple way to put it. That being said, the Commitment of Traders, the CFTC requires large institutions, and yes, that means hedge funds and banks, to report their holdings in the form of futures contracts, etc. And what we can see here is we've got all of our favorite, charts here. We got gold, silver, platinum, oil, GBP, USD, and by the way, these are for currencies. It's currency contracts, right? So euro contracts, long or short, etc. And we've got two tables that I sort of wanted to walk you guys through and just give you a high-level overview of what is going on currently with the Commitment of Traders data and where money seems to be flowing. So first off, there are two different things that I pay most attention to when it comes to the Commitment of Traders data. This first section and the second section that we've built. Now, this first section is relatively straightforward, but I want to caution you. A lot of traders who are new to the Commitment of Traders data make this mistake. They only focus on this as if this is some sort of holy grail. And what this is, by the way, is the net positioning. So when we hover over each one of these, you can see silver, gold. It's like an 80 to 81% long percentage, of futures contracts held by hedge funds and institutions. And that's great. But here's the thing. These numbers, if you've watched my video, videos for a while, you probably know where I'm going with this. Over the long term, these things change very, very gradually. Like gold has been a bullish reading all year long. That being said, though, if you're more of a trader, like a swing trader, a scalper, or a day trader, this information is sort of too long-term focused for you. That's why we built the second table down here. Now, I do want to come back to the second table in a moment. Let's actually give this some respect because this is still useful. Gold has been a monster trend this year, and institutional money has stayed very long, pretty much all year long. Now, we can also see silver as well is another big position. U.S. oil is interesting because it's been down recently, but perhaps there's some accumulation going on oil. You've got the Nikkei, you've got the pound, the Dow Jones. These are some of the most bullish-sided things. Neutral, you've got NASDAQ, Russell, copper, SPX, USD. That's sort of the neutral territory because we're seeing like a mid 50% long to short ratio. Now, on the bearish side, we got the Canadian dollar, which I don't know if you guys have seen for the FX guys out there. Have you seen the Canadian dollar? It's gotten crushed by the dollar recently. So institutional money, if we go back and think about some of the things that we just discussed, they're long things like gold, right? Gold is a monster this year. So institutional money was right on the money there. They've been right there. Maybe institutional money not loving their long positions on oil, but it's possible that they're accumulating for a move. That's another thing to think about. And then we've got dollar CAD, right? Dollar CAD, I just mentioned they're very short on the Canadian dollar. That trade, remember, when you're long USD CAD, you're long the dollar, short the Canadian dollar, which has been a very profitable trade for them as well. So I just wanted to point that out. It's sometimes worth keeping an eye on the bigger picture as well, but don't let this confuse you. If you're more of a day trader or swing trader, this is the section that may be a little bit more useful to you. This is the weekly COT filing where we can see the latest changes. I like to think of this table as the latest buys and sells, right? Because even though this is long-term focused, they change very gradually. This will show you the biggest and sharpest moves for the latest week-over-week filing. And what I want to show you is, this is why this video is interesting to me. They bought three things that really caught my eye. They bought the dollar pretty heavily. You can see USD contracts, long contracts changed aggressively to the upside. We did see a little bit of short contracts added, but then let's take a look at the other ones. NASDAQ, they increased longs and increased shorts, but the winner of this week was actually SPX. The S&P 500 saw a massive boost in long contracts added, and at the same time, they reduced heavily short contracts. So institutional money making some interesting plays for the gold traders out there. Look at this. They actually, if we take a look at the number of long contracts, they reduced longs, added shorts. That's a bearish week by institutional money. Despite gold trading at a premium right now, I thought that was very interesting and worth mentioning, that institutional money seems to be doing a bit of active selling into this recent rally, perhaps in anticipation of what could come after the elections. Maybe things calm down a little bit, whether, Trump or Harris wins. Maybe there's just a little bit of a, okay, well, we can move on and things are less calm or less chaotic. We'll see, but I thought that was really interesting. Copper also, Dow Jones, silver, some of the things that got sold, oil as well. And those were some of the notable ones. The yen also got, they closed long contracts and they increased shorts. I thought that was very, very interesting as well for the currency traders in the room. I do also want to mention, if you have not heard already, we are currently doing our 40% off Black Friday sale. All the information is available down below in the description. You can use the promo code there, YTVIP, if you'd like to get access for that premium discount. That is the biggest discount that we're doing all year long. And if you have any questions or you'd like to speak with someone on our support team about the Edge Finder, if you have questions, if you want to pay with crypto, if you want to see some examples of how traders are using it, if you want to see track record details, if you want to see testimonials, you can chat directly with a support member on our team using the first link in the description down below. They're standing by to help you, even, yes, on a Saturday. We just kicked off our Black Friday sale, and so we want to make sure that people who are looking to get access to our software take advantage of this discount. This is the big sale that we do each year, and we prepped a lot for this event to get more copies out to people who have been waiting on the sidelines for a price that is more comfortable to them. So for more information, you can find all of it down below in the description, or you can speak directly with a member of our support team for access below. Again, that's the first link in the description, or it will also be the pinned comment of this video comment section. So anyways, when we take a look at some of these moves here recently, what really caught my eye is that the indices and gold were the ones that I was looking at, right? So gold saw a little bit of selling here to end the week. Could that possibly be signaling a little bit more downside move for gold in the coming week? Now that we've seen institutional money seeing a little bit of selling, I don't want to jump the gun here, because remember that overall institutional money is still very long. It's just that they're decreasing some positioning, which I thought was worth mentioning. Could be signals of a short-term pullback forming in the gold price. If we take a look at the NASDAQ and the S&P 500, here's SPX, right? S&P had a big sell-off this past week, but institutional money seems to be stepping in to buy the dip. And I like that as myself, because I am kind of bullish on the indices going into the end of the year. And I currently have a long position on the NASDAQ. So I liked seeing that from institutional money. The other thing we could do is we could take a look at the smart money indicator for a moment. This chart allows you to look at net COT positioning versus retail positioning. So if we're looking at like euro dollar, you can see euro dollar's had a big slide here recently. Institutional money has actually been closing out of longs along the way down, and retail traders have really been picking up longs as this thing has crashed. No surprises there. This is something we see frequently, is institutional money sort of knows when to exit, and retail money unfortunately does the opposite. They've added longs heavily all the way down here against this kind of this big downward trend we've seen in the euro. But you can of course grab whatever you want here. If you have the Edge Finder, you can just select which asset you want, and you can track using our smart money indicator. That's again under the sentiment and positioning tab within the Edge Finder currently. Guys, that's all I've got here for you. I know it is Saturday, so I'm going to keep it brief. Markets are closed, but I just wanted to share what I thought was a very interesting COT report that came out this week. Thanks for watching.